Thank you, Alistair. I suppose it's better if I stay here, so
It's up to you.
We win a little bit of time.
Wherever you're comfortable.
So thank you for having me here. I'm the new managing director of the European Stability Mechanism, and I'm very glad to be with you here today. I have been the finance minister of Luxembourg from 2013 to 2021, and so I have witnessed in the Eurogroup what happened in Greece and how difficult the situation was. My predecessor, Klaus Regling, was coming to this event every year, and I would like to continue that tradition because it shows that the ESM is a partner of Greece and stays a partner with Greece. Minister Diakostis, you have rightly underlined that we live in the times of multiple crises. I think in Greek you could say polycrisis, if my little Greek is fine. And you could not be more correct. And if I look at the title of today's panel, you have geopolitics, which is obviously a big risk. You have technology, which is a risk and an opportunity, and you have environment. Now, Greece has been particularly hit by climate risks recently, and I would like to extend my condolences to all those who lost livelihoods and for the huge damage that this caused to the country. But it is also underlining that a risk like climate risk is there to stay. And I can tell you the geopolitical risk is there to stay. And I can also assure you that the challenges and options and opportunities that technology raises are there to stay. So I'm very joyful, like the minister and like all of us today, because Greece has received investment grade last week from one of the major rating agencies. It goes without saying, but it's even better to underline it. What a turnaround when you think where we were in 2015. Very few were thinking that this was even possible. So let's rejoice about that. I would like to congratulate the government for achieving this, for making the necessary reforms. Are there enough reforms or not? We're going to discuss that. I would like to congratulate the people of Greece who suffered, but did well because productivity is now higher than it was. That means the Greek people, they have contributed to this success story. And I would like to underline the role that the ESM and its predecessor, EFSF, have played in ensuring this. In a nutshell, what the ESM has done is making sure that Greece could extend the maturity of its debt in the very, very long run until 2060, and pays a very low interest rate. So it is also important to underline that Greece is immune to a large extent to the higher interest rates that everyone is paying now. So that's an advantage which you continue to have over the next decades. Now, one thing that we must not forget why Greece regained investment grade was because there was prudent fiscal policies. That's for sure, reforms for sure, but also because there was growth. And the growth was because structural reforms were made. And I think it teaches us all a lesson that if you do structural reforms that go into the society, that change the judicial system, make it more efficient, or that make state-owned enterprises more productive, or that bring banks back to such a level that they can extend loans, that they are profitable, when you do that, you have better growth. Now, the growth of Greece has been close to 6% as an average in the last 3 years. Very few countries have achieved that. And you have achieved that, as I said, also because you have better productivity. Let me dwell maybe just 1 minute on two major achievements that we have followed very closely as ESM, is the transformation that has happened in the banks. I mean, the banks were really shaky. They had lots of problems. They were not well capitalized. All this is not true anymore. They are now also benefiting from the higher interest rates, which improves their profitability. And as was rightly mentioned by Minister Diakostis, you have now foreign players who are interested in investing into banks. This announcement came in parallel with the announcement of the investment grade. And that's not by chance, because if you have investment grade, well, foreign investors believe in your country. I had the pleasure to visit the agency of Greece that's overseeing the state-owned enterprises, HCAP, and I would like also to underline what progress has been achieved there. Some state-owned enterprises did not even remember what the word profit meant and have come back to profitability just recently. So this is also quite an important achievement, and this effort must continue. Let me maybe just conclude this introductory remark to also stick to the time that's allocated by insisting on one thing that is key, and it also resonates with the question that was asked before. And I'll speak afterwards about the Resilience Fund and Recovery Fund. Is it good to take up debt today with the high debt to GDP that Greece still has? The answer is yes, if the debt is done for productive investment. For productive investment and not to finance running costs. Because what we've seen in the Stability and Growth Pact, which member countries are revisiting just now, and I hope that by the end of the year there's going to be a new Stability and Growth Pact, is that the former program was not fit for purpose in many ways, but one weakness was that there was too much insistence on growth and not enough, too much insistence on stability and not enough on growth and investment. Europe has suffered from underinvestment for more than a decade. Greece has suffered from underinvestment for more than a decade. We must not do that mistake again. Thank you.